Hi there. Welcome to The Open here on BNN Bloomberg. I'm Lindsay Biscaya in for Andrew Bell today, and we're going to get to some of the stories we're following for you in the BNN Bloomberg newsroom. Venezuela's acting president, Delcy Rodriguez, is calling on the United States to cooperate with her government following the capture of Nicolas Maduro. In a statement, Rodriguez invited Washington to work together on a development agenda within international law. U.S. President Donald Trump says Venezuela will need rebuilding and warned Rodriguez of consequences if she fails to cooperate. Maduro is scheduled to appear in a New York court later today. U.S. gold and silver prices are climbing after the capture of Venezuelan leader Maduro. U.S. President Donald Trump said the U.S. plans to run Venezuela, increasing uncertainty around the country's future governance. Gold is coming off its strongest annual performance in decades, supported by central bank buying and expectations for further U.S. interest rate cuts. And U.S. oil stocks are trading higher in the pre-market after U.S. President Donald Trump pledged to revive Venezuela's energy sector following the capture of Nicolas Maduro. Chevron, Exxon, Mobil, and ConocoPhillips are surging on expectations of expanded access to Venezuela's vast oil reserves. Trump said U.S. companies will invest billions to rebuild the country's crumbling infrastructure. And we'll take a look at some of the futures this morning. The U.S. futures, the Dow is trading up at the moment, same with the NASDAQ and the S&P 500. This, of course, riding on the back of that news of Nicolas Maduro being captured from Venezuela. If we take a look at the TSX, most Canadian energy stocks taking a hit today after that capture of Maduro. But despite that, the TSX trending up this morning before the opening bell. Of course, everything we're seeing today seems to be in connection with that capture of Nicolas Maduro, including, of course, oil prices. Those are steadying in the wake of this news out of Venezuela this morning. Gold prices rising today as well after this news. We're seeing both gold and the U.S. dollar strengthening on the back of this news of Maduro's capture. The loonie, though, falling against the U.S. dollar today in relation to this. Tech and AI stocks powered the markets last year, but with high valuations and growing concerns about an AI bubble, questions remain about their performance this year. We have Jamie Murray, president of the Murray Wealth Group, to unpack this, along with the Venezuelan oil situation and upcoming earnings. A lot to unpack here this morning. Good morning. Thanks so much for joining us.
Thanks for having me.
Let's start with the big newsmaker of the day, which has been making news all weekends. That's the capture of Nicolas Maduro from Venezuela. We're seeing the markets and commodities reacting to this today. What are you watching and what's kind of standing out to you the most in relation to that?
Yeah, there's certainly lots of varying opinions on the capture and what the future course of action the U.S. government will take with Venezuela. What we're watching right now is actually the FX rate, the Canadian U.S. dollar exchange rate, because I think that, at least in terms of Canadian equities and Canadian oil stocks, is going to be a big driver of how concerned the market is for Canadian crude. And as you just showed it, it's off a little bit today. So, I mean, there's a bit of a reaction. We're also seeing the big Canadian oil sands companies down about 2 or 3%. And I mean, I just think that reflects a new downside case if Venezuela is able to bring on a lot of oil over the next, call it 24 to 36 months. But there's certainly still tons of uncertainty. The next 30 to 60 days are going to hopefully reveal a little bit more information. But there is a world where this production can come back on stream if the U.S. government makes a very concerted effort. Likely would involve, I think, military personnel in the area from the U.S. government. But, if we're just going to be status quo and just taking one guy out of the equation and keeping the rest intact, I think there's a lot of variables that would make it very hard for Venezuela to meaningfully ramp up oil production over the coming decade.
Well, that was going to be my next, over the coming decade, because as you talked about, like there's an expectation here from some that maybe we could see that oil production ramp up in the next 24 months or so. Like, how realistic is a time frame like that? You sound as though you think it might take longer, obviously.
Yeah, I do. So, I mean, I think in a perfect scenario with unfettered access to Venezuela, I think 24 to 36 months is what it would take. But I think there's going to be a lot of issues and headwinds that stand in the way. I mean, number one is, are you going to have cooperative government, and even just factions within Venezuela, like guerrilla warfare tactics could, blowing up pipelines or disturbing wells could slow this down meaningfully, just that alone. So just a small subset of people could slow this down. But then there's the billions of dollars of capital you need. It's not just drilling new wells, it's building new pipelines. Venezuela has very, very heavy, hard to produce oil, requires a ton of power. And so you're going to need to rebuild the power infrastructure in Venezuela. And we're seeing, in the US, it's hard to find power and equipment, even engineers and electricians to do that. So a lot of technical aspects that is going to make this a hard ramp, I think.
And just before we move on to other things on oil, could what we're seeing happening right now with Venezuela hurt Canada's position, I guess, when it comes to oil in the US market?
And so it could. So that's where it comes up to this ramp up of oil production. I mean, certainly, even just a 30 to 40% increase in Venezuelan oil production, $300,000, $400,000 barrels a day, could start to make an impact in the differential that Canada oil trades at with global markets. And so that's why, I think it is going to be important to get that pipeline built out to Tidewater. But, there is another scenario where we're seeing oil prices actually up today. Like I said, if this transition period or in the next 30 to 60 days, we see a lot of resistance from within Venezuela to the U.S. involvement, we could actually see, oil prices strengthen, some more geopolitical risk, and Canada is still this great, energy secure, friendly country to buy and get your oil from. So we'll have to see how this ultimately plays out. But I would be probably buying the Canadian oil stocks on this 3 to 4% dip that we're seeing versus selling them.
Interesting. Okay, yeah, we'll have to keep an eye on what's happening there. Let's move on now to other things you're watching for in the market now that we're into 2026. Tech stocks. So are we setting up for another breakthrough when it comes to AI tech stocks in 2026, do you think?
Yeah, we think so. So we're long the mega cap stocks, Amazon, Alphabet, Microsoft. We own some Meta as well. And we also do like the semiconductor companies, particularly NVIDIA and Broadcom. On those two companies, we've seen their revenue estimates continue to accelerate for 2026 through 2028, just over the last 3 or 4 months. So you haven't seen the stock prices of those two companies move up too much in the last 6 months, but the revenue and earnings in the coming decade are moving up quite substantially. And NVIDIA particularly is interesting. They're right at the start of this NV72 super cycle. So this is their new chip. It combines 72 NVIDIA GPUs. It's a much more powerful unit. And so we're seeing just today, Foxconn, one of the companies that puts these racks together for NVIDIA, seeing accelerating orders and shipments. And so, that bodes well for NVIDIA, we think, this year. And ultimately, then we're looking for new, I don't know if breakthrough is the right word, but just more productive, better AI models. We saw a big jump in the last 18 months in AI models. And now as we get even better and better models, we're going to see enterprise adoption start to accelerate. So companies actually building AI into their core businesses and into their core products, which is just going to continue to increase usage exponentially.
And just lastly, you're also watching the shares of Aritzia today as well, set to surprise to the upside possibly when they report earnings later this week. What are you watching for when it comes to Aritzia, and what are you seeing today?
Yeah, so Aritzia has been one of our long-term holds in Canada, just a phenomenally well-run company. Had a great 2025, obviously up over 100%. So that does lead to questions. What is the upside from here? Well, when we look at some credit card data, when we look at other available public data, it seems like the company's still firing all cylinders. I think there's lots of upside to their revenue forecast for the quarter that they're going to report on Thursday and into 2026. And so as long as we keep seeing that upside to sales, we think the stock's going to continue to move higher. And ultimately, you're holding and owning Aritzia because you see, not just U.S. expansion, but eventually global expansion. You see this becoming a global brand like a Lululemon, like Zara. These companies have market caps double, triple, quadruple what Aritzia is. And so that's the play that you're holding Aritzia for.
Yeah, I wanted to ask you about that quickly because, of course, we're seeing Aritzia expand into the U.S., particularly this year. That's the plan, to open more stores there. But as you mentioned, international launch likely in a couple of years from now. Like, just how much more do you think this stock can really go up?
Yeah, we think it's going to grow revenue about 20% per year, we think, over the next 3 years. And so that's sort of our guidepost right there. If we can get another 25, 30% in 2026, we'd be obviously super happy with Aritzia. And just with the international expansion, why we're more encouraged by it is we're seeing them build these giant flagship stores. So they built a few in New York City. There's obviously here in Canada, there's a big one at Yorkdale Mall. They're taking over half of the Eaton Center, it seems. Here in Toronto and Vancouver, a big store. But they're putting in these big 40,000 square foot locations, and that acts as both a digital billboard, a physical billboard, and helps them with their digital sales. So if you think internationally, moving into a city like Melbourne, like London, Hong Kong, you can open one large location and get a whole lot of brand equity in that country.
Okay, lots to watch for. That's all the time we have, though, right now. Jamie Murray, president of the Murray Wealth Group, joining us. Thanks so much for your time. Appreciate it.
Yeah, thanks, Lindsay.
Coming up, we will get the latest on the situation in Venezuela and how Canada is responding. We'll be right back. Stay with us. Welcome back. CTV's Scott Hurst is joining us now with the latest on the situation unfolding in Venezuela. Scott, so good to see you this morning. Let's start with how this impacts Canada, right? Because there has been some fear that Canada's oil sector could be impacted with what's happening coming out of Venezuela.
Good morning, Lindsay. Of course, as you might expect, with the U.S. operation in Venezuela, that's leading to a lot of questions for Canada's oil and gas industry, as U.S. President Donald Trump is now pushing for American companies to go in and invest and revitalize Venezuela's oil industry. But after years of neglect and crippling sanctions, it is a sector that is in deep despair and could take many years for major investment before production can increase really dramatically. Right now, the Trump administration will, of course, have to deal with the geopolitical ramifications and also questions and concerns about the transition of power and also the legality of the U.S. operation in Venezuela. So experts reflecting on where Canada stands right now ultimately are saying Canada's oil sector can be prepared for what comes next by maintaining its competitiveness, Lindsay.
Let's talk about Prime Minister Mark Carney's response to all of this as well. He responded with a statement over the weekend. Analysts say this response was doing damage control against jeopardizing trade negotiations with the U.S. How measured will Canada need to be with Donald Trump, do you think?
Lindsay, we've seen many countries really with a measured response for several months dealing with the U.S., as many countries, including Canada, have been trying to strike some sort of tariff or trade deal with the Trump administration. But the response over the weekend from the Prime Minister is getting a lot of backlash for his response. Some of what he put on social media is calling for a Venezuelan-led transition process and labeling the Maduro reign as brutally oppressive and a criminal regime, and saying Canada has not recognized the illegitimate regime of Maduro since it stole the 2018 election. However, as I mentioned, Prime Minister is facing significant backlash as part of that response on social media, calling on all parties to respect international law, yet not mentioning the U.S. directly. And that is ultimately where the Prime Minister is getting a lot of criticism. We heard, speaking to CTV News, former Foreign Affairs Minister under Stephen Harper, Peter MacKay, really calling the response slow and lethargic. And political commentators also speaking to CTV News, suggesting Carney's response is really about damage control against jeopardizing trade talks with our southern neighbor. Lindsay.
Yeah, just so much to watch for there. Okay, that is CTV's Scott Hurst joining us live. Scott, appreciate your time. Thank you.
Thanks, Lindsay.
Up next, we'll head to New York to get the latest from the situation on the ground, because that is where Nicolas Maduro is set to appear in court today. And we'll break down the very latest on what we know right after this. How Healthcare spending has jumped in Newfoundland and Labrador, which has the finance ministers concerned over the growing deficit. CTV's Garrett Berry filed this report.
Newfoundland and Labrador is set to run a deficit of nearly $1 billion this year. Numbers released in this week's budget update paint a picture the finance minister admits is deeply troubling. But the recently elected government says it is still committed to some election promises, like a big tax cut.
We are only beginning now our long-term planning for our first budget in 2026. Everything else will be looked at, but we are focused on our three priorities.
And while the province's deficit has become one of the biggest in the country per person, there's plenty of company in the red. Every province is expecting to run a deficit for the first time since 2010. Analysts say the trade war with the United States has only hurt.
Very severe tariffs on that if we have to.
But other long-term pressures lurk just around the corner, like a rapidly aging population, which needs more healthcare and social services. That was a factor in Newfoundland and Labrador, where healthcare spending unexpectedly jumped an extra $430 million this year. Alex Lauren of the CD Howe think tank says don't expect Ottawa to come in to the rescue, not when Prime Minister Mark Carney has his own deficit concerns and has committed billions more to defense spending.
Maybe the opposite will happen. The pressure will likely be federal government will need to find solution to, limit its exposure to the provincial problems.
He doesn't believe the balanced budget is gone forever, but it will take a renewed focus on growing the economy and long-term problem solving before they come back in style across the country. Garrett Berry, CTV News, St. John's.
And as we continue to watch the fallout from the capture and ouster of Venezuelan leader Nicolas Maduro, who is set to appear in federal court in New York City today, Bloomberg's Miles Miller is live outside the Southern District of New York courtroom where Maduro will appear. We believe that's happening at about 12 Eastern time today. Miles, thanks so much for joining us. Tell us the latest on what we know so far in terms of what's going to happen today.
Well, we know that the former Venezuelan president and his wife are in this courthouse. They were brought here in armored vehicle earlier this morning. Nicolas Maduro and his wife, Celia Flores, are in federal court in Lower Manhattan this morning to face 4 criminal counts. Among them is a lead charge of narco-terrorism conspiracy. Federal prosecutors are alleging they intended to benefit as a foreign terrorist organization, which include FARC, ELN, and the Sinaloa cartel, as well as Tren de Aguas and the Zetas. They believe that this was a cocaine importation conspiracy and that they also possess machine guns and destructive devices. When you boil this all down, this is a 25-year conspiracy that the government is alleging that they were in government power, and while in power, were able to empower some drug traffickers to be able to get in and out of Venezuela to move drugs that had been seized by the Venezuelan government. In order to do that, they allegedly were able to get these drug traffickers diplomatic passports to get in and out. If that's not enough, it's believed that both Maduro and his wife were helping to run this drug conspiracy. The case is laid out in very stark detail. It starts in 2000 when he was a member of Venezuela's National Assembly and moves on to when he was the foreign minister of Venezuela. There is a specific period that prosecutors allege from 2004 to 2015 when they say he and his wife worked together to traffic cocaine. Much of it, as I had said, was previously seized by law enforcement and under armed military escorts. We are told that they had worked with state-sponsored gangs, all of this amounting to a big criminal conspiracy that prosecutors will have to lay out in stark detail in court. If convicted in this case, Maduro faces the possibility of life in a supermax prison in the United States. You compare that with the contrast of the former president of Honduras, who prosecutors said directly facilitated drug trafficking in his country, who was just recently pardoned by President Trump here in this country.
So much to watch for and so much we don't know yet, Miles. But obviously, some members of the Venezuelan government have been calling for Nicolas Maduro's immediate release. That's clearly not going to happen, at least not today. So what do we know in terms of what's going to happen now in Venezuela, as well as U.S. troops and military in the area?
Yeah, I mean, you heard from the president on Air Force One just obviously a few hours ago saying that the U.S. will take an active role in helping to run Venezuela. What that means is not exactly clear, but a lot of it will deal with oil. And right now, the president is hoping for a good working relationship with the vice president of Venezuela, who has assumed the presidency. And he said that if that doesn't work out, she'll face penalties that are sharper than what happened to Maduro, who was taken from the presidential palace by force and was brought here to the United States. What that means is unclear.
Okay, so much to watch for. That is Bloomberg's Miles Miller joining us live outside the courthouse in New York. Miles, thanks so much. And we'll take a quick look once again at U.S. futures as we count down to the opening bells this morning. As stocks, the market's looking up this morning. This, of course, on the heels of that news of Venezuelan President Nicolas Maduro being captured. If we take a look at the price of gold this morning, also quite strong. Another run for gold. Again, this is strengthened after this news of Maduro being captured. Both gold and the dollar up today. Oil as well, prices steadying after this news. You can see oil across the year has been dropping. Of course, 2026 is going to be an interesting year for the price of oil, with many expecting a supply glut, an oversupply. But today, these prices steadying out. And if we take a quick look at the loonie as well, sitting at about $1.37 today. So slight rise from earlier levels, but still weaker than the US dollar, of course, in the face of what's happening today. Well, Friday on Market Call, we were joined by Dan Rahinton, Vice President and Portfolio Manager at IA Global Asset Management. His focus was on Canadian and global large caps. His top picks were Visa, Amazon, and Lindy. And today on the show, we have Rick Rule, President and CEO of Rule Investment Media. His focus is on natural resource stocks. That, of course, coming up at 12 today. The opening bells are next. Stay with us. Here are the opening bells at the NASDAQ. Versant Media rings the opening bell, and at the New York Stock Exchange, New York National Guard is ringing the opening bell. It's time for the first 15. This is BNN Bloomberg trading just getting underway right now. We're going to check in on the equity market to start your morning. The TSX is up by 0.4% to start the day. Most Canadian energy stocks taking a bit of a hit after the capture of Venezuelan President Nicolas Maduro. Overall, though, the TSX still looking relatively strong. S&P 500 up by 0.5%, and the NASDAQ up by almost a full percentage point if we take a look at the U.S. markets. And taking a closer look at the TSX specifically, energy fuels, one of the biggest movers on the TSX this morning, up. It was up before the opening bell by about 15%. Now it's up by almost 3% to start the day. So this company continuing its streak from last week of being one of the best performers of its peers. Canadian National Railway shares going up today after that company was upgraded to a buy from a hold by Vertical Research Partners. It's down just ever so slightly at the moment, but we'll continue to watch that one throughout the day to see how those shares move. And for movers south of the border, we are now joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. It's good to have you. Thanks so much for joining us today.
My pleasure. Thank you for having me.
So let's, of course, start with the biggest news today, and that is the capture of Nicolas Maduro appearing in a New York courtroom later today. How are different sectors in the U.S. reacting to what we saw over the weekend?
Yeah, mostly higher so far this morning. And the big one and the one to watch today is the U.S. energy sector, which is really moving higher so far this morning, led by some of the big oil field services companies, Halliburton, SLB, which is the company previously known as Schlumberger, Baker Hughes moving higher as well as the U.S. refining companies, so Valero, Phillips 66, et cetera. These companies that would benefit from potentially an increased supply of cheap Venezuelan crude coming into those Gulf Coast refineries. So you have the U.S. energy sector, which is moving sharply higher this morning. Halliburton's up 8.3%, Valero 6.5% right now. The entire sector is moving higher. A handful of names to watch there. Others include Chevron, which of course is one of the only U.S. oil companies that had been operating in Venezuela before this ouster. It's moving up 6%, 5.9% so far this morning. Outside of that, defense names moving higher this morning. Mining companies, just on the kind of the geopolitical tension and uncertainty, those are rising as well. So a lot to watch today in the U.S. after this ouster of Maduro.
No kidding, plenty to watch. When we're talking about other stocks to watch, QXO has just been named a top pick at Benchmark. So what triggered that?
Yeah, QXO. This stock is rising a little bit, I guess, less dramatically than some of those oil names, but it's still worth watching today. So Apollo, the big private equity firm, has agreed to invest alongside it's leading a team to invest $1.2 billion in QXO. This is a building products company. They make siding, they make roofing materials, a number of other things. They have been on kind of an M&A spree. And this investment from Apollo could help kind of accelerate that M&A kind of crusade that the company has been on. Benchmark naming it a top pick as a result. It sees this kind of cash influx from Apollo and peers as helping to kind of accelerate that strategy. And that is why the stock is rising so far this morning. Definitely worth keeping an eye on, especially if we do see more M&A headlines out of this company in the coming weeks.
And finally, that hold on GH Research's psychedelic drug has been lifted. That has that stock soaring. It was up more than 42% in pre-market trading. What exactly is going on there?
Yeah, this is definitely one to watch just because of the size of the move. I mean, it's a smallish company, but 42% is nothing to sneeze at. As you mentioned, the FDA has lifted a clinical hold on the kind of development of this new drug, and the shares are moving quite sharply higher as a result. The company hopes to begin a global phase 3 trial program in 2026, and now largely across Wall Street, analysts are quite positive on the potential for this company to move forward with that. So you are seeing a big move higher in the shares. Looks like the regular trading up 36%, which, as we said, nothing to sneeze at. That's a huge move.
Yeah, it really is. Okay, something we'll have to keep an eye on. That is Bloomberg's Jeff Morgan joining us live today. Jeff, thanks so much.
Thank you.
Coming up, we will be joined by Well Money manager John Zechner to get his take on today's market-moving events related to Venezuela and to get his outlook for Canadian markets in the year ahead. That's next. Stay with us. Welcome back. We are watching oil markets today after Venezuela's leader, Nicolas Maduro, was captured by the U.S. this weekend. And while U.S. President Donald Trump is using drug charges to justify this military operation, the move certainly has something to do with oil, as Trump says the U.S. will be taking control of Venezuela's massive oil reserves. Our next guest says this big news from the weekend doesn't seem to be impacting the markets, as oil has been basically unchanged since Maduro's capture. Here to tell us more is John Zechner, chairman and founder of J. Zechner Associates. It's good to have you this morning, sir. Thanks for taking the time.
And good morning, Lindsay. Happy New Year to you.
Happy New Year to you as well. So when you're watching oil markets this morning and oil prices, you're not really surprised by the fact that they're kind of steadying out?
Well, it's funny when you saw the news on the weekend. It certainly was a big event, but yeah, it's not really a big event for the oil markets nor for the stock market. I think, in point of the view of the oil markets, I mean, I guess the reality is Venezuela, even though they're sitting on the world's largest reserves of oil, they're only producing about 1 million barrels a day, and that's basically all going to China. And China has a pretty good backlog right now of stocks, so that's not going to make a big difference. I mean, ever since Hugo Chavez came in the mid '90s, I mean, Venezuelan oil was close to 4 million million barrels a day, and now it's been decreasing ever since. So whatever ends up happening with the U.S. taking control here, and maybe they can sort of start to increase production again, it's going to take a long time. That's a hard regime to go into. The opposition is somewhat still in control. You've got gangs sort of on the streets. You've got, it's hard to get equipment in there and run it. And Chevron, when it was nationalized, was the last one in there. So maybe that's why there's more optimism around Chevron and Exxon today, that they'll have the better ability to increase over time. But it's going to be a long haul, Lindsay. And on the other side, I guess ultimately for Canada, if they did increase production again, it would be a negative, obviously, because they are a big producer of heavy oil, and most of that heavy oil will probably end up going to the U.S. under this scenario, and that would compete with Canadian heavy oil. So it's a bit of a risk for us. So that's the way it stands. But markets are shrugging at this right now. It's interesting though. The biggest move is actually in the gold market this morning, which is a whole different story on what we're seeing in terms of geopolitical risk.
Okay, I want to ask you about the gold market just in a moment, but just going back to what you said about Canada's oil market, right? Because as you say, the heavy crude that Canada produces is very similar to the heavy crude that comes out of Venezuela. So do you think that there's any risk here to the Canadian oil market in the U.S., or do you think because, as you say, it's going to take a long, long time to really access that Venezuelan oil, that Canada really doesn't have anything to worry about right now?
It'll take a long time, Lindsay. I mean, rebuilding the infrastructure just to, get the production going, getting it out of the country, and then how you transport it, whether by ship or whatever, into the U.S. versus, Canada, we're still sending it down by pipelines to, U.S. refineries that are able to take the heavy, our heavy crude. So, yeah, it could ultimately be a long-term factor, but it's nothing that's going to impact the market anytime soon. So any market reaction, I think, in the short term from Canadian stocks, I'd call it an overreaction.
An overreaction. And you say the ultimate winners here could be the oil infrastructure companies that will need to really ramp up production as well.
Yeah, absolutely. I mean, the guys who are, the Halliburtons of the world and the bigger players going to go in there and sort of rebuild the infrastructure and the delivery and everything else. But it's like I keep saying that I just think this is a tougher job. I mean, you look at, things like mining in West Africa and other these things, and how difficult it is where you don't have a stable geopolitical environment, and how much more it costs. I mean, an oil worker really wants to go down there with armed guards around him 24 hours a day, worrying what's going to happen. I don't think it's going to be a big impact anytime soon. It's just a headline right now.
Okay, but the big impact, what you're saying, is what you're seeing in the gold market today. So tell us about, we're seeing gold prices rising. What are you seeing there?
Yeah, that's interesting, because I think that's more a statement in my mind on the geopolitical risk increasing, basically on what Trump is doing in here, going in and taking the leader of a foreign country like that, pulling them out. I mean, I think global markets are getting more and more worried about sort of U.S. acting on a more authoritarian basis. Trump is clearly bypassing Congress completely on all of this. I mean, he did on tariffs, where you're supposed to get approval from Congress, and a lot of the other recent moves, which whether it's, in Iran or, other places in the world. Now they're talking Greenland again, and certainly what they're doing in Venezuela and overall in South America. And I think worries are that he's acting just more dictatorial on that basis, and that instability worries markets. And it certainly takes global investors a little more out of the U.S. dollar again, and puts some risk there. And soon as the U.S. dollar comes under some pressure, gold is the immediate beneficiary of that. So, I mean, it's a pretty big move to the upside today. I think it may be more speculative players. I mean, central bankers have been the big buyers of gold, but everybody else seems to be joining into the market, and that as you say, is the big winner this morning.
Okay, so much has happened, and we're really just a couple days into 2026. So I want to talk about the markets in general as we head into a new year, what you're expecting after the run we saw last year. You have mentioned as well that 2026 is a midterm election year in the U.S. How do you foresee things playing out in terms of how the markets will do this year?
Yeah, and in terms of, I know the expectations are for about 10% gain for the market from all the strategists that did the year-end projections. If I was a betting man, I take the under on that one, quite honestly. I just think there's still some headwinds. You've had 3 great years. It's hard to get, double-digit returns 4 years in a row. As you mentioned, midterm elections are generally the toughest year of the presidential cycle. So there's that. Valuations are at an all-time high, by many, whatever metrics you want to take. And, there's obviously geopolitical and economic risk. We don't know what's going on. You can be changing the head of the Federal Reserve in the U.S. I don't even know whether interest rates drop as much as markets are expecting, given inflation is not coming down and growth is not slowing down because you've got such massive fiscal stimulus out there, particularly in the U.S., which, running 6% GDP deficits, in peacetime and non-recessionary time is almost unheard of. So, but all those risks out there. So we're pretty defensive in where we're going, looking for income producers, looking for lower valuation stocks, not pulling the tech bet, but even within technology, I'm sort of moving out of the AI plays more and some of the laggards like the software companies that, seem to be reflecting the, the worst of all worlds and are trading at reduced multiples. So we're just looking for decent places to hide, staying involved in the market, but looking more for income, lower valuation, stability in earnings, as opposed to sort of chasing some of the higher beta, economically sensitive plays.
Is that how you think investors should be heading into 2026 if they kind of want to refresh their portfolio, maybe diversify a little more, as you say, lower valuation stocks, getting away from AI maybe a little bit?
Well, I think absolutely. I mean, you look at the average investor, and you look at the index weightings because there's so much passive money out there. So passive money is in the index, and one of the indexes, 45%. I heard you talking to a guest earlier, 45%, tech and telecom. I mean, that's a massive weight. I mean, the six biggest stocks in the U.S. that were $25 trillion, which is 150% higher than the entire S&P 500 at the peak of the tech bubble in 2000. So yeah, you've got a lot of concentration risk. You've got extreme bullishness in the U.S. Retail investors are playing to a hard degree, and you got some very high valuation stocks. And when these things start to come down, they don't drop, 5, 10, 15%. These are things that go down 60, 80%. I mean, even look at something like Oracle, when it peaked in September and then the bloom comes off the rose a little bit, turn around and it's down 40%. So, I mean, these moves happen quickly and dramatically. And I think investors have to be wary of that. And, you never went broke taking a profit is the old adage, and I'll go with that. Take some of the gains. Now we're into a new year. You don't have to worry about paying taxes on it. Take some gains and get a little more defensive in your overall holdings. Have some bonds in there. I mean, U.S. long-term bonds at almost a 5% yield, Canada at almost 4%. It's a nice portfolio hedge. It's some income, and if interest rates do fall, they'll appreciate on top of that. So. And
just lastly, before we let you go, you mentioned the software sector. Are there any stocks in particular in that sector that you like?
Yeah, I mean, we've actually in Canada, bought Constellation Software this year. It had its worst year in a long time. And I think, the story is still intact and the valuation is much more reasonable. In the U.S., names like Salesforce with his Agentforce rollout, a good AI play. Adobe, I mean, they've written the thing off as being demolished by AI in general. But I mean, everybody's still got Acrobat out there. I think they'll continue to use. And yet, it's trading at 15 times current earnings, which is crazy in my mind. It's still growing over 10%. So there's lots of spots that I think of, are safe and won't be impacted as negatively as maybe the market is anticipating.
Okay, John Zechner, chairman and founder of J. Zechner Associates. Always good to have you join us. Thanks so much.
Thanks, Lindsay.
Up next, we will hear why proxy investing could be a theme to watch in the year ahead. Stay with us. That's after the break. Welcome back. This morning on The Street, we were joined by Jeff Hull, senior financial advisor at Manulife Wealth, to hear why proxy investing was a theme on his radar.
They're just like the Dow Jones was started back in the end of the 1800s with 12 companies. It was supposed to represent sectors of the economy. Now it's 30 that tries to represent the U.S. economy. Proxy's been used throughout history for different things, but there's some really great ones because a lot of people get very excited about things like IPOs coming up. Obviously, the big one this calendar year, Elon Musk has announced that SpaceX will become a public company. Everyone's already applauding that. Can't wait to get their hands on it. Almost nobody will get their hands on it. So they're all going to wait for the IPO to come out. But there's lessons from history people have to be careful of. Good old Facebook, now Meta, when it went public, to huge applause and a big rise. And back in May when it went public in 2012, going into August, the same year as 3 months later, it had fallen 50%. So people got to be careful with IPOs because there's a lot of hype and marketing and attention that dissipates shortly thereafter. But there are some really great ones where sometimes you can get some of these IPOs for what I call free.
All right, free is good. I just want to ask one quick question before you get into that. With IPOs, what's the kind of success rate where you buy it and it actually goes up, or you buy it and it goes down?
Yeah, I think as a generality, the best time to own the IPO is as a founder of a company or an employee or somebody that had it long before it hit the public markets, because that's, again, peak hype, and that's when the people are trying to sell off the company. They want to get the maximum price, just like selling a home. Someone wants to sell their home at the maximum price. They got to make it look pretty and stage it. It's the same thing for an IPO. So people need to be very careful. It's a bit of the roll of the dice. Sometimes I suggest people wait till after the IPO comes out and all the excitement, settle down, and it's off the radar, and then all of a sudden, then they can pick it up at a better valuation once it settles in. That tends to be the best time. And also, there's usually lockups for the founders and originators of the company. And usually they can't dump their stock or sell any for 3 months or 6 months. They have like a blackout period almost where they can't sell anything for a certain lockup period. And then all of a sudden it just floods the market again, bringing it down potentially again.
Okay, let's talk about free now then.
Free is best. We're going to get free money. So here's some secret ways to get space.
Is there ever free money? What's the catch?
Well, the catch is, the first example I'll give you is you have to buy Alphabet. Alphabet is the parent and 100% owner of Google, YouTube, Waymo, the Android operating system. Most people don't know is they were the very first investor in Elon Musk's SpaceX and got 7% of the company.
Oh, okay.
In 2021, they issued more stock and they didn't want to be diluted, Alphabet, so they put more money in to keep their 7%. So anybody that happens to own Alphabet or Google stock, you're actually getting 7% of SpaceX for free, and at the valuation of roughly $1 trillion to $1.5 trillion. It's about $100 billion. They'll just come in to Alphabet in one day when the IPO comes out. So that's a great way as one example of a few.
All right, and what other ones, what other options? Are there different ways to do it as well?
Yeah, there's a company called EchoStar that has legacy satellites and systems out there. They just did a deal with SpaceX. They've signed 2 deals together. It still has to pass regulatory approval, but part of their payment, other than just cash, is they're getting 2% of SpaceX as an example, which doesn't sound like a lot. But if you have a small company getting a piece of a massive company, that 2% can become very large. It can really move the needle. But one of the other desirous IPOs that will be coming out some point in the future, probably not in 2026, is OpenAI, which is the parent and creator of ChatGPT. That's the one everyone's desirous to get their hands on. But again, that's going to cost a fortune if someone buys it in the public market. But again, you can get it for free if you own Microsoft stock. Microsoft owns 27% of OpenAI. So you get that as a bonus if you happen to own Microsoft.
And other companies with OpenAI, maybe smaller ones that people might not think about, or might be more affordable. All right, more affordable.
That's a little bit tricky. Like even recently, SoftBank out of Japan, actually, which is private though, one of the biggest private equity companies in the world, bought a piece of OpenAI. But a lot of these companies, whether it's SpaceX or OpenAI, are always trying to do big deals with massive conglomerates, so they can kind of keep it tight to a small select few until one day when they want to go out at peak excitement on an IPO. But again, investors need to be really careful with IPOs. Make good decisions, make sure it's right for them, and don't get caught up in FOMO, fear of missing out.
Well, it sounds like if you want to get in right at the start, get in with money that you don't need. And if you want to play it safer, give it a few months to unwind, because most of them kind of settle down, don't they?
Yeah, and again, why not just own Alphabet, which is Google, which is the most profitable company in the world? And then you can own Microsoft, which is also one of the biggest companies in the world. Microsoft is the 3rd largest. Alphabet, which is Google's the 4th largest company in the world. You can own that, and if for any reason SpaceX doesn't turn out or OpenAI doesn't turn out, you still have these amazing, solid, incredible monopoly-style businesses that you own for your future.
Coming up, we'll take a look at some early market movers on the TSX. That's next. Stay with us. Welcome back. We're going to take a look at the TSX, particularly over the last year. The TSX returned more than 28% last year. So we're going to break it down by sector and give you a closer look at what moved up and where. Here are the top sectors for the TSX. Materials was the #1 performing sector with more than 90%, 92% to be specific. Then it was financials coming in at 32% return. Then consumer discretionary at 29%. Infotech was next with a 20% return on the TSX. Of course, just a reminder, this is throughout the whole last year. And utilities at 15%. We saw energy then come in at 14%, consumer staples at 12%, communication services at 4%, and industrials at 2%. And real estate was flat throughout the year. And we're going to check in on the equity markets today, starting with the TSX. It's seeing a bump today after some records, really, over 2025. We're seeing it continue to go up today. Of course, gold prices are rising on the backs of this capture of Maduro. That news coming out of Venezuela over the weekend. That's strengthening gold prices, which, of course, is boosting up the TSX today. If we take a look at some of the other commodities, oil prices fluctuating today amid that news of Maduro's capture. The market already grappling with an increasing glut in 2026. And of course, Venezuela's oil really only accounts for a small fraction of global supply. So investors appear to be weighing this morning. We're seeing modest gains and losses flipping back and forth as this news comes in. Gold rallying today, as I mentioned, on the back of this news of Maduro being captured. Gold and the U.S. dollar are rallying today. Gold climbing above 4,400 an ounce, pushing all the markets higher. And if we take a look at the loonie is falling in the face of the dollar today. It is down by about 0.4% to start off the day. Of course, the U.S. dollar is heading for its biggest gain since November, and this is due to that news we're continuing to follow today, which is the capture of Venezuelan President Nicolas Maduro, really affecting the markets on this Monday morning. And we'll be right back with the latest headlines and markets coming up right after this. Hi there. Welcome to the second hour of The Open. We will take a look at some of the stories we're following for you in the BNN Bloomberg newsroom. Venezuela's acting president, Delcy Rodriguez, is calling on the U.S. to cooperate with her government after the capture of Nicolas Maduro. In a statement, Rodriguez invited Washington to work together on a development agenda within the international law. U.S. President Donald Trump says Venezuela will need rebuilding and warned Rodriguez of consequences if she fails to cooperate. Maduro and his wife are set to be formally charged for drug trafficking and other crimes today. U.S. oil stocks are trading higher today after U.S. President Donald Trump pledged to revive Venezuela's energy sector following the capture of Maduro. Chevron, ExxonMobil, and ConocoPhillips are surging on expectations of expanded access to Venezuela's vast oil reserves. Trump said U.S. companies will invest billions to rebuild the country's crumbling infrastructure. And U.S. gold and silver are climbing after the capture of Maduro as well. U.S. President Donald Trump said the U.S. plans to run Venezuela, increasing uncertainty around the country's future governance. Gold is coming off its strongest annual performance in decades, supported by central bank buying and expectations for further U.S. interest rate cuts. And we'll take a look at the TSX this morning. It is trading just a little higher after the opening bells, up by 0.9%. Of course, as we mentioned, gold and silver up today after the news of Maduro's capture. That's helping to push the TSX up. U.S. markets also looking up to start your day as well. S&P 500 up 0.5%. Dow Jones up more than a percentage point, and the NASDAQ up almost a percentage point at 0.6%. And if we take a look at some of the commodities we're following today, particularly the price of oil, this is big in the news today after this capture of Nicolas Maduro. Oil prices flipping today. Investors still weighing the news that we heard over the weekend, particularly of Donald Trump saying that the U.S. will be taking over the oil fields. Of course, we do have this expected supply glut in 2026, which could be affecting the prices today. Meanwhile, gold, as we mentioned, on a run today, reaching more than $44,000 an ounce. And if we take a look at the loonie, a little weaker in the face of the U.S. dollar. You can see it is down to start the day. And And let's turn to the latest in the markets as we continue to digest the news coming out of Venezuela. We're joined by Jonathan Corpina, managing partner at Meridian Equity Partners this morning. It's good to have you join us. Thanks so much.
Good morning. Thanks for having me.
So in the face of this news coming out of Venezuela today of the capture of Nicolas Maduro, what in particular are you watching in terms of the markets today? What's catching your eye?
Yeah, so obviously the news came out over the weekend. It gave us some time to digest exactly what was going on and happening, and we were all in anticipation of what is that impact going to be on our markets. Clearly, we're seeing today that the markets have absorbed this information. They're looking at it as positive news in the actions that we saw this weekend. We're seeing upticks in the oils sector and refineries. So it's going to take a little time, I think, for this to play out, right? We're just getting into it. We don't know exactly what the next steps are going to be. What's the short-term steps? What's the long-term steps? But it seems at this point right now, it is viewed positive on our markets. One thing I do see is a little bit of a disconnect is as our markets trade higher, the VIX should go lower. We're seeing them move in the same pattern right now. So I think that's kind of backing my theory of there's still a lot more information that needs to come out. There's still some uncertainty of how this is going to play out. So it's going to take some time for us to get there.
Yeah, of course, there's a lot of uncertainty, as you say, a lot of questions in terms of what's going to happen. Things seem to be moving quickly. When it comes to the price of oil, as you mentioned, upticking a little bit this morning, but fluctuating too, that we've seen throughout the morning, particularly before the opening bell. Is that a surprise to you, given the news and given what Donald Trump's saying about how the U.S. is going to kind of take over when it comes to oil in Venezuela, or are you kind of waiting to see what happens, first of all?
Yeah, my original thought, the knee-jerk reaction to that, I thought we were going to see some pressure on oil prices and see it come down. But then again, it comes back down to, as we were saying earlier, of there's a lot of information to come out here. We don't know exactly how it's going to play out. Are the courts going to get involved? Is U.S. going to be able to seize and obtain and hold on to this oil? Or is this something that we're going to have to give back to Venezuela if there is a new regime or a change in administration there, and how that all plays out. So I think we are going to see some volatility in oil over the next few days until we get a little bit more information.
We're seeing the price of gold and silver going up today as well, but also copper hitting a new record of $13,000. What are you watching for in terms of some of those precious metals, and anything surprising you today?
Yeah, I think as we're talking about the headlines of Venezuela and the precious metals that they are sitting on there and the abundance of them, I think we're seeing a little bit of a safe haven trade there as investors are using gold and oil, gold and silver and other precious metals to shift some short-term money into, to take some risk off the table. Gold has been trading at the highs. Obviously, you've seen where silver has been trading. So it seems like it's very lofty at these levels now. But I think with the uncertainty that's going on with Venezuela and how our involvement plays out there, and if our involvement gets expanded from there into other countries, I think right now, in a short-term basis, investors are looking for some safe havens to put some money.
Okay, let's shift away from Venezuela for a moment, even though it is big news. I'm sure we'll be talking about it at least all week. Yeah. But there's some other things you're watching for this week, some other data coming out. We'll start with the jobs numbers and employment rate coming out later this week. Any expectations there? How do you think that might shift things?
You know, it all ties into the Fed, as we've spoken about before, how the Fed remains data dependent and what they do with this economic data to help guide their decisions. I think we're going to continue to look at our economic calendar this week and see if there's any indications there that might give us some insight as to what the Fed might do for their next meeting at the end of the month. As early indications are telling us right now, the Fed is, all the bets are that the Fed is not going to cut rates at the Jan 28th meeting, but a lot can happen between now and then. And it does start with all these issues, right? The Fed, as I said, remains data dependent, so they're going to look at our economic calendar and the job numbers and how that plays out. And, when you have a headline like we've gotten over the weekend, that might certainly give the Fed a reason to pause any further movements, whether they were cutting rates or raising rates. Those debates there, they can use that as somewhat of an excuse to take a deep breath, take a pause. Let's see how this plays out. We're kind of moving into uncharted territory here with our involvement with Venezuela. So, I think the Fed rates, we're going to continue to see the odds of a cut continue to go lower and lower as we head towards this January meeting.
Which is so fascinating because, roughly 3 rate cuts were kind of already priced into the markets as we head into 2026. So how does that change things really for investors, or does it?
Yeah, and I think if you look at the comments come out of the last meeting, right, we're not getting overwhelming support of the chairpersons on this committee that we should be cutting rates, right? There's a lot of dissension inside and in between. So that's telling us that, yeah, there is spirited conversations going on whether they should cut rates or not, right? And now when you have this headline, like I've said, over the weekend, this is going to give them a pretty good excuse, right? And not spook the market to pause rates, right? It's not going to be because of our domestic economic data isn't supporting another rate cut, or we're unsure of how a pause is going to react on our markets. They're going to use that as an excuse, and this is what the Fed's allowed to do, right? They kind of hold the cards, and they can pull the levers back and forth. They're going to use this as an excuse, which I'm not debating whether that's right or wrong. Personally, I think it's the right thing to do at this point. But they're going to use this as an excuse to say, you know what? Let's take a deep breath. Let's see how this plays out. Let's see what the administration is going to do further, and see how our involvement is going to be. We're going to use this as an opportunity to pause. I think we all collectively can get on board with that there isn't some gray cloud somewhere over our economy that's forcing the Fed to make that move.
Of course, with so much uncertainty ahead, right? Particularly, there were some things that seemed like they were certain, like a couple of rate cuts. Now, I take your point. There's more uncertainty there as well. Where should investors be looking? Is there anywhere you think investors can go for a little more certainty, or what do you think people should be looking at as we head into the new year?
Yeah, so I think if you kind of take a step back and look at where we've been and where we're anticipating on going with rates will continue to come down lower, probably in a much slower pattern than we've seen before. I think the financials, as they've ended the year on a very good performance, I think we're going to continue to see that in 2026. We see the cyclical tech trade very quickly come in, very quickly come out. I think if we pattern that over a longer period of time, I think the tech trade, that too is going to be positive as we get throughout the year. But we're going to have some real interesting headlines over the next few days or few weeks to get us through the beginning of this year here.
For sure. Okay, that's all the time we have. We'll be looking forward to those interesting headlines. Great. Jonathan Corpino, managing partner at Meridian Equity Partners. Appreciate you joining us. Thanks so much. Well, coming up, the U.S. has captured Venezuela's leader, Nicolas Maduro, this weekend, and we will look at what that means for Canada's oil markets when we come back. Stay with us. We are watching the price of oil today as the market reacts to U.S. action in Venezuela following the capture of Venezuela's leader, Nicolas Maduro. U.S. President Donald Trump says the U.S. will be taking control of the country's massive oil reserves. And here to tell us more about how these developments are impacting the price of oil, what this means for Canadian oil markets, is Randy Ollenberger, Managing Director of Oil and Gas Equity Research at BMO Capital Markets. It's good to have you join us this morning. Thanks so much.
My pleasure.
Before we get into how this could affect the Canadian oil market, let's just take a look at the oil prices in general today as we start off this Monday morning. Anything you're surprised about? We're seeing them fluctuating, I guess you could say.
Yeah, I mean, the impact here, I think, is probably in line with expectations. We thought it could be modestly lower on the back of this, just given kind of the negative sentiment, and that nothing's really changed. I mean, the blockade is still in place. It's uncertain whether the Venezuelans are going to comply with U.S. demands. And so really nothing's changed today versus, say, 2 weeks ago. So we thought, maybe oil prices might be a little bit softer this morning with the prospect of a return of Venezuelan exports. But it's traded up a little bit. I think that just reflects the fact that, the blockade still is in place. And so that does mean a little bit less oil coming out of Venezuela. But the bottom line is the market is still oversupplied by 2 to 3 million barrels a day. And so I think negative sentiment at the end of the day on the oil price is going to win out.
We know that Canadian heavy crude oil is very similar to Venezuelan heavy crude oil. Is there a concern here that maybe the U.S. could be replacing what it imports when it comes to Canadian heavy crude for refining by Venezuelan heavy crude? Like, is there a concern there?
Absolutely. I mean, I think there is a risk here that if we do see U.S. companies return to Venezuela, start investing significant capital, that we see growth in Venezuelan heavy oil production. And the natural home for that oil is the U.S. Gulf Coast. we send around 400,000 to 500,000 barrels a day of Canadian heavy oil down to that market. And we would likely get displaced from that market. So we would have to move that oil elsewhere. We have some pipeline capacity to the West Coast that's available, but not enough to fully move that oil. So that would create some challenges for Canadian heavy oil producers. And we're seeing that reflected in the performance of those stocks today.
Is there an immediate concern, though, or do you think, like some experts are saying, that this would take a very long time when it comes to legalities that are required, also, production, just infrastructure in the area when it comes to Venezuela? Like, is this something we're going to see happen within the next 24 months, or do you think this is years down the road?
Yeah, I mean, I think it's going to take at least 24 months and more likely 36 months. It's going to take some time here. It's going to take some reinvestment. But, I mean, keep in mind, we could see Venezuelan production up to 1.1, 1.2 million barrels a day in pretty short order if the blockade is lifted and Venezuela is complying with U.S. demands. That could mean we could see up to 300,000 to 400,000 barrels a day of Venezuelan heavy oil coming into the U.S. market. We saw an average in 2025 about 140,000 barrels a day of Venezuelan oil coming to the market. So at the margin, you could see incremental heavy oil coming out of Venezuela in the very near term. And in the medium term, say the 24 to 36 month period of time, you could see substantially more Venezuelan heavy oil coming into the market. And that's really where the risk is.
What would it take? I mean, can you go through, maybe if you could, go through the process in terms of what it would take for the U.S. to start accessing more Venezuelan oil?
Well, I mean, the first thing, obviously, is there's a lot of U.S. sanctions in place. So Chevron's been receiving waivers, which is what's allowed them to bring their production into the United States. That's the 140,000 barrels a day that's coming in now. If those sanctions were lifted and Venezuelan oil production was, say, in the range of 1.2 million barrels a day, theoretically, you could see, up to 400,000 to 600,000 barrels a day of Venezuelan oil coming into the market versus that 140. So really just lifting the sanctions and allowing Venezuela to return to previous levels of production, which was in the range of 1.1, 1.2, that could be something you could see in very short order. Longer term, I mean, we're really talking about significant investment in the tens of billions of dollars to start restoring production to where it was prior to all of the sanctions getting put in place, which is around 2.5 million barrels a day. And longer term, I mean, if you really wanted to think about where oil could go, I mean, prior to Chavez coming in 1998, Venezuelan oil production was in the range of 3.5 million barrels a day, with plans to go to 5 to 6 million barrels a day.
If Canada, I take your point that what you said earlier in terms of Canada needing to increase production and build more pipelines to stay competitive when it comes to Venezuelan oil. But if there's a supply glut kind of on the horizon, particularly for 2026, an oversupply of oil, is there much point in Canada continuing to build more pipelines when there's just an oversupply globally of oil?
Well, I mean, absolutely, because we do need to move some of the oil that we're already producing. So, I mean, the alternative is to shut in that oil, which really doesn't make any sense economically. Canada is a low-cost producer. It's really just, we don't have the ability to fully move all our oil to different world markets if we're getting pushed out of the U.S. Gulf Coast. So, I mean, it doesn't make sense to shut in Canadian oil. Canadian oil is a very low-cost source of supply. It's actually lower cost than, say, the Permian, for example. So it really wouldn't make any sense economically to see that oil shut in. And so I think there's an economic incentive for the country to capture the tax revenue, to capture the royalties, to make sure that we're still seeing people employed in the industry. So there certainly would be an economic incentive to do that.
Okay, for investors that are maybe watching this and wondering whether they should invest in some oil companies today or looking at some of the prices that are out there and wondering what's going to happen in terms of this fluctuation, is it too early to tell, or do you think it's still maybe an okay idea to invest in Canadian oil companies, or where do you think investors should be looking at this time?
Yeah, I mean, I think, if you said, you look at the oil price today and, it's $57, and let's assume it stays in that range of $55, $57. I mean, Canadian oil and gas companies can still make very good money at those levels. They can still grow their dividends, they can still grow their production, and they can still buy back shares at that level. So, I mean, I think the investment case for Canadian oil companies is still intact at these price levels, keeping in mind that whatever happens in Venezuela is going to take some time to unfold. 2 to 3 years out, I mean, who knows where the oil market will be, but certainly if we see higher levels of Venezuelan oil production, I mean, that could have some negative implications. But, we're seeing the stock sell off pretty aggressively today. I would argue that sell-off is overdone, considering it's going to take some time to see more Venezuelan oil in the market.
Right. Okay. So that's my final question for you then, right? Because what we're seeing today, obviously things are very fluid, things are moving quickly, and there's a lot that has to be considered over the next couple of days and weeks. How long do you think it will take before we see kind of a more steady price of oil after maybe the dust settles after what happened?
Yeah, I mean, I think we're going to have to just watch what Venezuela says. So we have a new president. She was sworn in this morning. So what is she going to do? Is she going to comply with U.S. demands? Are we going to see any of these sanctions lifted? That's really what we're watching, to see whether the Venezuelan government complies with what the U.S. wants and whether or not that is enough for the U.S. to lift those sanctions. If that happens, then we definitely will see more Venezuelan oil coming into the United States. Not enough that it causes a problem initially. It's really more that medium-term growth potential that creates a problem.
Okay, we'll have to wait and see what happens. That's all the time we have. Randy Ellenberger, appreciate your time this morning and your insight. Thanks so much for joining us.
My pleasure.
That's Randy Ellenberger, Managing Director of Oil and Gas Equity Research at BMO Capital Markets. Coming up, today's ETF report right after the break. Stay with us. Welcome back. Bullion was, of course, one of 2025's best performing assets. Asking for the commodity to repeat that feat this year may be a tall order, but that doesn't mean it won't generate upside. In fact, the stars may be aligning for another year of stout returns for gold. And one popular ETF in Canada that tracks gold is the S&P TSX Global Gold Index ETF. The fund seeks to provide long-term capital growth and invests in shares of the companies that make up the S&P TSX Global Gold Index in the same proportion as they are reflected in the index. And the top holdings are Newmont with a weight of 16%, Agnico Eagle at 12%, Barrick is at 11%, Wheaton Precious Metals is at 8%, and Franco-Nevada is at 6%. Coming up, one of the top 5 Canadian home and auto insurers has bought the Canadian operations of U.S. insurance company Travelers. We will reveal the benefits of this transaction coming up right after the break. Venezuela's acting president, Delcy Rodriguez, is calling on the United States to cooperate with her government after the capture of Nicolas Maduro. In a statement, Rodriguez invited Washington to work together on a development agenda within international law. U.S. President Donald Trump says Venezuela will need rebuilding and warned Rodriguez of consequences if she fails to cooperate. Meanwhile, U.S. oil stocks are trading higher today after U.S. President Donald Trump pledged to revive Venezuela's energy sector following the capture of Nicolas Maduro. Chevron, ExxonMobil, and ConocoPhillips are surging on expectations of expanded access to Venezuela's vast oil reserves. Trump has said U.S. companies will invest billions to rebuild the country's crumbling infrastructure. U.S. gold and silver are climbing following the capture of Venezuelan leader Maduro. U.S. President Donald Trump said the U.S. plans to run Venezuela, increasing uncertainty around the country's future governance. Gold is coming off its strongest annual performance in decades, supported by central bank buying and expectations for further U.S. interest rate cuts in 2026. We'll take a look at the North American markets today, all trading up by just a little bit. TSX is up by more than a percentage point, S&P 500 up by 0.7%, and the NASDAQ also trading up almost a full percentage point, of course, on this news of Nicolas Maduro's capture, and we will, of course, be following that for you throughout the day. As one of the top 5 home and auto insurers in Canada, Definity has purchased the Canadian operations of U.S. insurance company Travelers. So what benefits does this acquisition have for investors and maybe for the industry? Let's ask Rowan Sanders, President and CEO of Definity. He joins us in studio. It's good to have you. Thanks for coming in.
Wonderful. Great to be here. Thanks for having me.
For viewers who maybe don't know, can you just kind of explain what Definity is to start us off?
Yeah, Definity is a publicly traded insurance company. We used to be a mutual insurance company called Economical Mutual. We went public in 2021. And now we're the fifth in the top 5 largest P&C companies in Canada. We insure about 70% of our revenue is personal insurance. So that could be your homes, your cars, your cottages. And 30% is commercial insurance. So that ranges from small businesses all the way up to specialty products and large corporate Canada.
What about travelers piqued your interest?
Well, partly this goes back to the whole reason for demutualization. We wanted to be a leader in the Canadian industry. So we're building a Canadian champion in P&C industry. And as such, we wanted to build our business and become one of the top 5. When we started as a public company, we were number 8. We organically grew to 6. And now with Travelers, we'll be number 4. But really what it was, this is a good Canadian franchise long-term. They have about $1.5 billion in revenue, 1,500 very talented, experienced employees. And for us, it gave us scale in personal insurance, but also access to new products and expertise in commercial lines. And that really broadens out the proposition we can offer our customers and we can offer our broker partners. So we're delighted. And this is really a transformational moment for us.
It is transformational and takes some time to maybe kind of figure out the ins and outs of buying a company like this. Like, how do you plan to manage the integration of it all?
Well, we've been planning quite a lot. And in fact, we've had about 600 people on both sides of the business working on this for the past 6 months whilst we went through the regulatory process. What we will be doing is we'll be transferring about $1 billion of personal lines business off the Travelers' legacy platforms onto our platform. It's called Vine. It's a brand new, modern, leading industry platform. We'll be rebranding the products as they kind of move over. And then we'll do the same thing for the commercial insurance business, as well, working with the broker partners. But day one, we're still in the marketplace, the front lines, business as usual, serving customers and writing new businesses, settling claims.
Is this, do you think, like a tipping point when it comes to consolidation within the insurance industry?
I think it is. Our view and our thesis here is that we've built a company that can grow organically at about twice the rate of the industry. That's how we've been gaining share. But we also believe that the Canadian property casualty industry will consolidate, much like many of the other sectors in financial services. If you think about the concentration in the top 5, 6 banks and what's been happening recently with more bank consolidation. If you think about the life insurance industry, which is quite consolidated, we believe, and our thesis is more consolidation is going to happen. And I think Travelers is a really good example of that. This is a large, successful U.S. business that had a sizable Canadian business, but they felt at $1.5 billion they were subscale, and they didn't have the scale to fulfill their ambitions and compete effectively in the Canadian marketplace, which is how come, when we approached them, we decided to put the two companies together.
Obviously, AI, tech, and data technology, like all of that's kind of in every sector right now, in every industry. How are you kind of using that to help your business continue to grow, particularly with this buy as well, this deal?
Well, firstly, what we did is we've recently modernized our whole technology platform. So we have brand new technology, and those platforms really allow us to be very efficient. They allow us to interact directly with our broker partners, make it easy for customers to deal with us. In one of our brands, 5 questions, 5 minutes, you can buy a policy. But also AI is a really big investment. We've been using AI for well over a decade, but now with the new generative AI, we've got 275 practitioners in the business. We're investing heavily in it. We use it in all parts, from customer acquisition to retention to identifying, fraud management, to help with pricing. It's going to be significant for us, and I really believe that as you move the business from Travelers onto the Definity platforms, when we put through our models, our AI-supported, capabilities, and the digital platforms, that's a big part of the reason how we get $100 million a year in cost synergies out of the business. And so this is why this is good for our investors. We will be able to run that business about $100 million plus a year better than it's been run today on the more modern platforms. It's great for our brokers because we've got a broader product suite, to offer them. And the Travelers employees are actually very excited to be joining a Canadian champion.
You mentioned, so you went through the benefits for investors then, particularly with that kind of revamp of your digital platform. How long do you think it will take before investors kind of see some of those benefits?
Yeah, when you put a company like this together, I mean, this is two pretty sizable companies. It takes about a good 2 to 3 years to fully get those benefits.
Right.
So what actually happens with us is we put the companies together. It takes about 1.5 to 2 years to fully convert the business. And then once we have triggered those cost savings, they will come over a 3-year period. And roughly, there's about a third of the benefits that come in the first half, and the other 2/3 come in the second part of the integration platform. And those are the cost benefits that I'm talking about. There are other benefits that I think will manifest as well. Travelers was not able to grow the revenue. It was pretty flatlined for the last decade. With our bigger platform and our capabilities, we think we could get revenue synergies. And we think that there'll be some loss ratio improvements as well, particularly as you put some of the regulated product lines onto a more modern and sophisticated underwriting platform. So those will have come through a little quicker.
Just lastly, given your answer a few moments ago about how you think that you are going to see more consolidation within this industry, within this sector, do you see more mergers and acquisitions within your future in the next couple of years?
Yeah, I think that's our plan. I think what we've said to investors is, look, we're a capital deployment strategy. One of the financial benefits of this transaction was that we had excess capital and we had a completely unlevered balance sheet, no debt on our balance sheet, coming in as a mutual company to a public company. This allowed us to deploy that excess capital. And we've also issued a $1 billion bond to help fund this deal. Two terms, 2 tenures there, about 4% yield. So taking advantage of low interest rate costings. So that's been helpful for us. It's been very well received by investors. Our investors fully supported. And in fact, these were heavily oversubscribed raises and transactions. And the story for us is we will continue to look for further deployment opportunities to consolidate. We've built a platform to allow us to be a bigger business, to be able to be one of the top 3 insurance companies in Canada. So our strategy is to keep growing organically, but also look for further acquisitions. And our thesis is that, it'll be harder to compete and to deliver what your customers need in this evolving world without size and scale.
Interesting. Okay, well, we'll have to leave it there. Thanks so much for coming in. Appreciate you joining us in studio.
You're more than welcome.
That was Rowan Saunders, President and CEO of Definity. Well, coming up, we'll have your hot picks. We'll zero in on 3 plays in the tech sector right after the break. Stay with us. Thank you. Nice to meet you. The tech sector is always seeing speedy growth, and our next guest is sticking to AI infrastructure for the new year. And for more now, we are joined by Francisco Bito, Senior Portfolio Manager at FM Investments. It's great to have you join us. Thanks so much. Happy New Year.
Thank you. Thank you. Happy New Year.
Let's get to your picks. So the first one is AMD. What are you currently liking about this stock?
Well, I like AMD because basically they're a diversification play on NVIDIA. NVIDIA is the 600-pound gorilla in that industry. But, playing second fiddle to them, I always said it's a great place to be. And AMD has some new partnerships with OpenAI, Oracle, and so on that were established in 2026. And that's a great prospect for future earnings.
Okay, so what about Astera Labs? That's the second pick for you. The stock saw some growth, but what else caught your eye when it comes to kind of the company's advancements in AI this year?
Right. Well, there's one, when it comes to AI infrastructure, there's, of course, the GPUs, which is one of the heartbeat of a lot of these data centers and hyperscalers and so on. But what about when bottlenecks occur and all the routing that needs to occur between all these GPUs and so on? So that's where Astera Labs comes in, and that's they're growing at 40% a year. They're growing their earnings at 40%. So that's nothing to sneeze about. So yes, they're a great company, and they have corrected to somewhat over the last couple of months. So they are a great buy.
Looking at that 3-year chart, we saw the bump near the end. Even that 5-year chart, you can see that bump near the end of the last 5 years. Like, you're expecting that to continue or even go up even more in 2026, you think?
Oh, yeah. Higher in 2026. I mean, we're just beginning the AI revolution. The whole industry is growing at about a 25% clip. So that's, that's very significant. And it's rare to find an industry that is going through that kind of growth unless it's something really revolutionary, which is what AI is. So I expect that to continue in 2026.
Your last pick is Broadcom. You noted seeing the company's earnings, but give us a better idea of why you like this one.
Well, basically for the same reasons also that I like Astero Labs. It's another play on the network, on the switching, and all the other infrastructure besides the GPUs that go into building a hyperscaler. And but besides that, on top of that, Broadcom has very strong margins and good cash flow generation, and also somewhat a little bit off their highs. So makes them a good pick.
I wonder, when we're looking at AI infrastructure in 2026 and investing in AI, right? Like 2025 was a big story for companies, big companies like NVIDIA that produce a lot of chips. Are we moving into a bit of a different landscape when it comes to what you're investing in with AI? Like maybe more companies that are manufacturing different things that will help with the AI race?
Well, that's a good question. What I believe is that the market is really good at anticipating, where the industry is heading. And of course, you can't grow at the rate that AI has been growing forever, right? So at some point, it continues to grow very fast, but some slowdown is suspected, and of course, it gets priced in. So my opinion on the whole deal is just look for the ones that are appropriately priced. Maybe NVIDIA can be at some point. Right now, I like AMD, the 3 hot picks, because their PEG ratios, which is basically adjusting their earnings per share by their growth rate. They look pretty reasonable. So those are the ones that I like to focus in 2026.
You say it sounds as though at least you're expecting still a big AI tech run in 2026. Do you expect it to be at the same level that we saw in 2025?
We'll see, but at least something to get excited about for sure. We'll see.
Asking you to look into the future a little bit. Okay, Francisco Beto, Senior Portfolio Manager at FM Investments. Appreciate your time. Thank you. Coming up, when U.S. President Donald Trump rolled out global tariffs in April, economists braced for the worst, but did it pan out? That's next. When U.S. President Donald Trump rolled out global tariffs in April, economists braced for the worst. Since then, a lot has happened, but the sky has yet to fall. So were the experts wrong, or is it still just too early to tell? This Bloomberg doc looked into that.
Credit where credit's due, President Trump made a big bet that the U.S. had a magnetic appeal, and that would enable him to get a better deal from U.S. trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Did the economics profession get it wrong on tariffs? Or is the impact just delayed? Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. If we were to trace US tariffs over the last, let's say, 100 years or so, there's our axes. From the end of the 19th century into the start of the 20th, tariffs were on a declining trend. Get to 1930 and we get the infamous Smoot-Hawley Act, and most economists believe contributed to and deepened the Great Depression. From that point on, we have a continuous decline in the average US tariff rate till Trump started his second term. He's jacked it all the way up to around 15%. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. And low growth and high prices is a challenging state of the world, which economists call stagflation. Markets panicked. Let's look at the S&P 500. It looked like this.
If we looked at a chart for economists' forecasts for inflation, we've got the COVID bump in inflation, we've got prices coming almost back down to target, but then, oh dear, President Trump's introduced his tariffs and we get another inflationary bump. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. That inflationary bump from tariffs that the Fed was focused on as a risk before they cut interest rates, it hasn't materialized, at least not yet. We looked at lots of the different things which people in the United States buy every day. If tariffs were being passed on to consumers, we'd see a pretty tight relationship. In fact, what's happening is there doesn't seem to be a very strong relationship at all. US firms are facing higher costs for their imports. So far, though, they're not passing those higher costs onto consumers. Why is that? Well, it's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load, shipping to the United States before the tariffs could come into force to build up cheap inventories that they could then sell down after the tariffs came into place. If we look at a chart of US imports, what we see is that in the first months of 2025, imports weren't exactly off the scale, but they were significantly higher than they had been in the same months in 2024 and the average of past years. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals, some of which brought good news relative to the previous status quo. We have US allies like Japan and Korea, which are scrambling to make offers to the United States, promising hundreds of billions of dollars to help rebuild US manufacturing as a price to retain access to the US market. They're something of a Swiss cheese of exemptions and carve-outs, and smaller tariffs obviously have a smaller impact. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's One Big Beautiful Bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. AI and the trade war kind of point in opposite directions, and investors are paying much more attention to the potential for AI to be a significant profit driver. Certainly, it seems like there's enormous potential with artificial intelligence. At the same time, the International Monetary Fund and other economists are warning that the markets have got a bit over ahead of themselves. There's irrational exuberance. If markets have a moment where they lose their confidence, that can only mean one trajectory for stocks: downward. There are signs of weakness showing up in the US economy. We've gone from a labor market comfortably creating 100,000 or more jobs every month to barely expanding, and in some months the number of jobs shrank. So a concern here is that, well, when the tariffs do start to hit, they're going to be hitting an economy where the labor market's already weak and potentially amplifying that downward trend. China, which views itself more as a peer competitor to the United States, they've turned up with their own leverage. You impose tariffs on us, we're going to impose tariffs on you. You block our access to semiconductors, we'll block your access to rare earths. And we're seeing the impact of that really clearly in the trade data. China's exports to the United States are way down relative to where they were last year, way down relative to the historical trend. So, who pays for the cost of tariffs? We're seeing US firms absorbing tariffs in lower profit margins, Why might that be? I can think of two reasons. The first is no one wants to be the first to raise their prices and lose market share. The second, and this is more speculative, is no one wants a vengeful US president. But despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. And if the US Treasury is looking forward to $3 trillion in tariff revenue over the next decade, all of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households. One way of thinking about this second Trump presidency is that it's an innovative approach to managing the fading of America's imperial moment. America was the world's single superpower. In 2025, that's clearly not the case. Trump is attempting to use that last moment of strength to get a better deal. Will President Trump succeed in reigniting the flame of American preeminence, or will he just hasten the end? I think on that question, the jury is still out.
We are just about an hour away now from Market Call. Today on the show, we have Rick Rule, President and CEO of Rule Investment Media. His focus is natural resource stocks. And if you missed Market Call on Friday, we were joined by Dan Rahinton, Vice President and Portfolio Manager at IA Global Asset Management. His focus was Canadian and global large caps, and his top picks were Visa, Amazon, and Linde. We'll take a quick look at the markets before we wrap up here, starting with the TSX. You can see it is up today, trading up by about a percentage point. And if we take a look at some of the big movers on the TSX today, materials and infotech sectors are strong, while energy stocks are dragging the TSX down a bit. When we're talking about materials, Endeavour Silver is the biggest mover so far, up more than 13% today. Of course, gold, silver prices are going up after the news that Nicolas Maduro has been captured from Venezuela. We're watching that today very closely. Perpetua Resources is all up almost 7% at the moment. Meanwhile, Cenovus Energy is down the most on the TSX, almost the most it has been in 9 months, due to concerns about increased competition with Venezuela in the oil market. And we'll see how that shapes up in the next couple of weeks. If we take a look at the U.S. markets, here are some of the top gainers in the U.S. today. You can see those markets trending up. The U.S. oil service stocks are jumping today. So SLB, Valero, and Halliburton. Versant begins trading on the NASDAQ today as an independent company following the completion of Comcast's spinoff. And Coinbase is up after being upgraded by Goldman Sachs. We'll take a look at how the commodities are doing today. Energy, we'll start with that. Oil, nat gas, and gasoline. These prices are fluctuating quite a bit after this news coming out of Venezuela. Investors still kind of figuring out exactly what's happening here, what they're going to do. You can see as oil is up, gas is up, natural gas is trending down by more than 5% at the moment. And we'll take a look at metals, the price of gold and silver and copper. Copper reaching new highs today, new record highs at more than $13,000. Gold futures are up by about 3%, silver up by more than 8%. Of course, we're watching this news coming out of Venezuela. This is affecting gold, silver, copper, as well as the US dollar today, as investors are kind of flocking to safer havens. If we take a quick look at the loonie before we go as well, it's a little weaker, particularly in the face of the US dollar, which is gaining today, potentially about to reach new record highs. And we'll take a look at Bitcoin just before we wrap up here. You can see Bitcoin is up. This is a one-year chart, and it's trading up today. That wraps up this edition of The Open. Morning Markets is up next. Thanks so much for watching.